Hey everyone, it's Jordan here. I'm so excited to be talking today with Cluny. She's from MCAP. You've probably heard me talk about monolines or mortgage finance companies, basically non-bank lenders. This is my mortgage connection. So we're coming to you. This is real, it's unedited, it's a great conversation. So listen in. We know that people are certainly feeling the financial pinch right now. I mean, life is really, really expensive. And something that I think is going to be more common in 2024 coming up are debt consolidation loans. So I know that some of you don't know what a debt consolidation loan is. So why don't we start there? What's a debt consolidation?
Yeah, a debt consolidation is really when you kind of look at your whole financial picture and you realize, like, hey, I've got a car loan, I've got 2 credit cards, I've got a line of credit, and I owe my mom money because she lent me some money to do some renovations. And you take account of that whole amount and it's $75,000. So as you're paying each loan or credit card balance, there's small payments that you're making, but you're not actually getting any headway in paying down that debt. And you're starting to feel a little stressed about it. I think for the average consumer, we don't like to talk about our own money, our debt loads.
Yeah, for sure. Canadians don't talk about money that much. There's a real stigma about it, right?
Yeah, unless your parents have taught you some financial literacy and budgeting skills, or even how to use a credit card, and that they need to be paid off every month. Not knowing that just means you're more likely to get yourself into a financial position where you owe more than you're able to pay down. So in that situation, if you are feeling stressed because of money, you're feeling like you don't know where your money goes, you're relying on your credit cards to pay for groceries or pay for bills, you need to reach out and ask for help. And I think all mortgage brokers, especially like Jordan, she doesn't just focus on mortgages, but she focuses on holistic financial health. You're like a financial social worker.
Yeah, I mean, that's certainly a way of putting it. And with the debt consolidations, what we're doing is we are taking all that debt and basically redoing or refinancing your mortgage to include that debt. So yes, your mortgage is a little bit bigger, but it's combined all those debts and for the most part, certainly at a lower interest rate, right? Because I mean, your credit cards are up around 20%, 21, 22%. Lines of credit, what are they? I mean, they're like prime.
Close to 8% now, depending if it's unsecured or secured. You might have a 12%.
Right, if you've got an unsecured line of credit, it might be 12%. And you've mentioned a good thing. Even a home equity line of credit, we can roll back in, or we can fix that payment. So
it's all about taking those debts. So let's say you have those 7. You're in BC, you probably got a ton of equity in your home. And all you're doing is you're accessing the equity in your home by taking out the funds you would need to pay out that debt. So you need $75,000. You've got the equity in your home. Jordan will look at your options and say, okay, do we need to take out that money, give you a bigger mortgage at a lower interest rate? We're about 5%, 5 to 6% now, depending on the terms. Paying out all those debts for you so you have a clean slate. It gets rid of all those little monthly payments that are bogging you down and giving you that stressful feeling. And it's all about cash flow.
Yeah, exactly.
I mean, I'm a budget queen. I know you are too.
Yeah, absolutely.
Jordan's got great resources because part of that debt consolidation.
I didn't invite her here to talk about me.
No.
It's just she really is so good at budgeting, and I think that debt consolidation is going to be a huge thing and incredibly helpful for so many. In this new year, but okay, sorry I interrupted you there.
No, and the trends are that people's overall family debt loads or household debt loads have been increasing year over year. During COVID, we were all stuck at home, saving our money. We weren't going out to eat. We couldn't travel. As the world has opened back up, we're spending like we used to. So all those savings we have are gone. And now what we're doing is we're carrying more debt.
That's it. That's right. We've plowed through the savings, but the consumer debt that we're holding is way more than it used to be.
It's higher than pre-pandemic times. So it's not just you who's feeling the pinch, it's all Canadians, and I think it's So important to ask for help. You can do a refinance.
Yeah.
A second mortgage is a great option if you've got a first mortgage with a really low rate that you don't want to lose.
Right.
But I think so many people get caught up in the rate conversation.
Yeah.
That for other people, peace of mind and cash flow is more important than rate.
Cluny's bringing up a really good point, cash flow.
Mm-hmm.
So what does she mean when she says, it helps with cash flow?
Yeah.
Because the payments on those lines of credit card debts are higher because of, the interest rate, and maybe you're only paying down just the interest. And guess what? When you only pay the interest, the loan isn't going anywhere.
It grows.
It grows, right?
Yeah.
So often when you combine all those debts, the monthly payment that is required to pay the interest and pay the loan down is less than if you took your mortgage payment plus your 3 credit cards plus your car loan, right?
Totally.
So you might have, without the debt consolidation, you might be paying, let's say, $4,000 a month on your debts. And obviously we have to do the math, but maybe we could do a debt consolidation and your monthly one payment would be $3,300. So that's $700 back in your pocket, and your debts have been paid off.
If we pay off your debts in a refinance, and then for whatever reason you've become accustomed to living a certain lifestyle, and you don't take ownership of your spending, you're going to put yourself right back into that same situation. So sitting down, doing a budget, finding ways you can save money. We all pay for hair, nails, streaming services. You can think gym passes. There may be some things that are wants and some things that are needs. So being able to realize where your money is going and where you can cut back to live within your means. We are a very credit card reliant country, but learning to live within your means learning to live with the income you have left after you've paid off your expenses every month,
right,
and not spending more than that. It's a great chore, a great challenge for January for people.
You know what? That's actually a really good point. I think that's I'm not huge on the New Year's resolutions because I don't know if you can actually keep them. But I think, starting out January, saying, okay, we need to get our household budget back on track. Now, when can we do these debt consolidation loans? It's great if you've got a renewal coming up.
Oh yeah.
That's a perfect time, especially if you have the the ability to wait a couple months. You've got a renewal coming up in 2024.
Yeah, you have your mortgage coming up for renewal this year. What that means is your term opens up and you have the ability to refinance with no penalty. So if you're looking at your mortgage statement and you're like, hey, this is coming up in August, you need to call a mortgage broker to go over the options that are available to you to either ease cash flow or look at the rate options at renewal if you maybe want to consider moving lenders. There's so many great products and programs that might be a better fit for you. It's just about having a conversation, and Jordan provides this advice free to her clients, which I think is so important to know. People are scared, being like, who do I go to? Who do I ask for help? Definitely give her a call, set up a time, because if you don't know what options are available to you, you're kind of in this treading water mode of like, I'm making my payments every month. But if you're feeling that financial pinch, if we know there's some economic uncertainty coming up, finding ways to cut some expenses out of your budget, do a January challenge, honestly.
I think I'm going to go with that. And I actually have a wonderful budget that MCAP has provided. So I will give that to you guys as well. It's one of the most comprehensive budgets to really see what, the cash in, cash out. That's great. So I'll make sure to share that with you guys.
Perfect. Great New Year's plan. Do a budget. I'm a big proponent of it, and it's
people don't want to do
that. I
know.
Though. People don't want to because the stress is, it's like putting your head in the sand. If I do the budget, I'm gonna see. But honestly, we're all feeling it. We've all gone through financially hard times. I myself included. I've had to take advantage of a debt consolidation before, but it got me to my goals faster than if I tried to pay off those debts myself. I was able to consolidate, pay them off, put more money in savings, set up an emergency fund for a rainy day in case of illness or job loss. So many great options when you're speaking with a mortgage broker. So definitely take Jordan up on our offer.
Thanks so much for taking the time to watch, and thanks again, Cluny.
Thank you, Jordan. Thank you, guys. Have a great day. Bye.